As we get ready to trade Wednesday, August 11th, we have the CPI data coming out tomorrow in pre-market around 8:30 Eastern time. I think if that runs hotter than expected, we're going to see a weak open. If it comes in line or less than expected, then we're going to finally get our rally tomorrow over 44.50. Here's our 5-minute chart and what happened today, Tuesday. We came out of the gate with a nice little gap up open and rallied up to a new all-time high, but that all-time high was another run against 44.50 and fail. So we'll look below 44.50 and fail. And fail we did. We rolled over and sold off down, ended up filling in the gap to yesterday's close and dropping down below yesterday's close. But look where the low of the day held. It held at 44.30.03. So another move that back down that holds above 44.29. We bounced off of this. This was probably on the vote. We came all the way back almost to the high day, but then rolled over again, losing the all-time closing high level near the end of the day. But then in the final 2 minutes of this 5-minute candle, they circled the wagons and rallied this thing back up to just stick the landing so that we had the required new all-time closing high that we need to go with, this new all-time high that we made intraday. So that was a good finish to sort of a nasty-looking end of day. It started off looking nasty and then turned around and finished positive. Anyway, here is our simplified daily chart, and here is our most recent non-farm payrolls report, and it's kind of got a unique look and feel all of its own. Very, very small, tight range and flat. Kind of were flat last month, but much bigger range from high to low on the days. So another unique setup here. And I guess this setup had its own circumstances because we had, that vote on the infrastructure bill and then this CPI data. So the market is sitting sideways, waiting for this uncertainty to be lifted before it makes its move one way or the other. When we look at the roadmap, let's get to the roadmap here. I thought I had that pulled up. I think it's back here. Yes. Okay, so let's look at the daily chart roadmap in close-up here. Here we are, sideways, 3 days in a row, closing above that 44.29 level, the breakout point from which we finally burst on Friday. And then here we are, Monday and Tuesday. So here's the deal, if we are going to have, success tomorrow and break out and make yet another new all-time high, obviously we've got to come back at the end of the day and stick the landing once again and make yet another new all-time closing high. But, how many more times are we going to take a run at 44.50 and fail? I think if we took one more run at it tomorrow and failed, we would have a complete meltdown and sell-off. But if we take a run at it and break through it, we're going to move on through our 80 handle rule like we do every time we round the bases after a new handle has been reached. 44.50 gets us to 60, gets us to 80, gets us to 4,500. I'm not saying all tomorrow, but over the course of the next couple of days. If we come out of the gate weak tomorrow, if that inflation data is much harder than expected and spooks the market, maybe we're going to sell off. We're going to break down below this 44.29. That's going to be your first clue. You do not want to be buying dips that drop below this 44.29. Even if it holds a higher low against the one we made on Monday, you still want to wait for that 44.29 to be regained. If we break down below 44.29 and make a new low on the week below Monday's low, then we're going to come right down to the 10-day. If the 10-day breaks, we're going to fill the gap here to the August 4th close from last week. And if that all breaks, then we're going to hit the 20-day simple moving average, which is going to just be rising out of the over 44.90 tomorrow, but maybe it drips back down to about 44.89 or so if we were to sell off down to it, and maybe that will be what gets the market interested. Maybe we will find some buyers again, just as we did last week when we sold off down to the 20-day. And from there, maybe we make a 100-point move up to the 44.80s over the course of the next few days after that washout happens. If we break down below the 20-day, maybe there's just a move that that wants to happen to see if this low from August 3rd holds, and we can reverse off of that. But there is a little gap to fill just below that, and if all this fails, it's clear sailing all the way down to the 50-day. So that's it. I think that's pretty cut and dry. Let's just take a quick look at the options. I still like, if we're still going to be using Friday the 13th options, And even though these aren't in the window prices right now, this is where your attention should be focused off of the open. 4,400 on the put side, and maybe even going higher all the way up to 44.20 or 44.25, especially if we take that move out of the open. I'm pointing over to the roadmap here on the right-hand side. Especially if you take that move out of the open and fail against 44.50 one more time. You want to be looking for where your $8 window and your volume is standing out on the put side. It's going to be somewhere between 4,400 and 44.25. Over on the call side, I like the 44.50s. These are not in the $8 window. We have to come out of the gate and see these stick on $8. Otherwise, you gotta just keep moving down to a lower strike. If we come out of the gate with a little bit of a gap up open and we're running all the way towards 44.45 off of the open, maybe these are going to be above $8. Maybe these are even going to be all the way to the $11 window. So you might end up having to do that. And if you don't want to do that, then I think you can go out as deep as the 44.60s. Just make sure that you're paying a proper window price and there's some good volume there, okay? That's how I would do it. I hope you have a great rest of your evening and that this video helped you out and gave you a good idea as to what may or may not happen tomorrow. Have a good rest of your evening. As always, good luck and good trading.